Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Thursday, July 7th, 6:21 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Futures, Bitcoin up 1.3%, oil up 1%. Equities are green, but not markedly so, about 0.25%. Copper, big rebound day, up 4%. Macro front, we've got jobless claims today being Thursday. We've got both nat gas and oil inventories that start breaking at 10:30 this morning. And we've got Jim Bullard of the Fed at 1 o'clock. He's always got something interesting to say. And one thing to keep in mind today as we head to the close, tomorrow before the bell, we've got the June jobs report that'll hit at 8:30 tomorrow. So depending on what your holdings are, when your expirations are, some of you may have stuff for that's expiring tomorrow. Others may be, positioned farther out in time. The importance of that jobs report will have different layers of importance depending on, when your expirations are. And if you've got stuff expiring tomorrow, but you want to keep, say you come to the end of the day and whatever chart you're trading looks good and you've got an expiration tomorrow, what you can do is roll up to even money and go farther out in time. That way you won't be subject to a big downdraft, if there is one, on the jobs report. Because if you got something expiring tomorrow and there's any kind of a pullback due to the jobs report, that'll hurt a lot, and there may not be time to recover by the end of the day. So if you're going to hold something, I would buy some extra time just as a safety blanket. So not a lot of technical events yesterday, but let's blow through the charts as we always do and kind of get set up for today. I wanted to revisit oil. We talked about this yesterday. We talked about the double top that formed, and we also talked about this significant break of the trend line. And we said yesterday that we expected a move down to the 200 and technical support. And that's actually what we've got, with a nice hammer that formed on that. We got a perfect bounce off of the 200. Now, just playing this out a little bit here, I see two things. Number one, there were responsive buyers at the 200, which is what you'd expect. Got a nice bounce. If there's a green candle today that forms here, what you could say is you've got an emerging 3-bar reversal, 1, 2, and then a green 3. And if you really wanted to trade it, what I would do is just set your stop here at the bottom of the body of the prior candle if you wanted to try and trade that north. The other thing I see is what we've done since March is create a well-defined trading range between 125 and 95. You see, I'll just trace out the box here, come across. We revalidated that as support, come back up, and there we've got the double top. So we've got a $30 wide trading range And that may be important for a couple of reasons. Number one, if price comes back down here to 95, you would certainly have an objective long if that holds. If you didn't catch this and buy it here. Number two, if we were to work our way back up to the top of the box and take out these prior highs, then we've got that measured move of $30 being the width of the box, and that would put us up at a measured move target of 155, adding 30 onto 125. So we created the box. Now we've got a well-defined trading range, and if you're active, if you want to trade it or use it in conjunction with trading equities, there you have it. So, and I wanted to point out another thing. We haven't talked about it a lot, but the micro mini futures, the symbol for that on oil is /MCL, 1/10 of the contract of the big boy oil contract. And if you wanted to get your feet wet trading oil, I would do it with that MCL contract and just buy one. So 1/10 of the contract, and get comfortable with it. I think that's a great way to play. I was doing a lot for me a few weeks ago, and it works really, really well. It's liquid, and even with one micro mini contract, it will certainly keep your attention, because oil moves fast, and I would not recommend stepping into that with more than one contract if you're not familiar with the volatility and watching that P&L go crazy. So there's that. So let's move ahead to the equities. Like I said, not a lot happening yesterday. We did make progress, up 0.34%. I think the important thing to note here is the 20 EMA proved to be too much to handle yesterday and capped the advance. So that 20 EMA comes in at 384.65. What the bulls really need to see happen is 385 be taken out, and then that would open up 390 and potentially 395, where this daily downtrend line comes into play. You can see here we had broken out of the 60-minute downtrend. We went up for a touch of 386, but then that was rejected. I think you can use this downtrend line as your pivot, just against the low. What you don't want to see would be a drop down below this 381.50 level. You kind of want to see that hold if for the bulls to kind of really maintain the chart. You start rolling over down in here below 382, 378. That wouldn't look too hot. So if you're sitting on gains, I think the technical level is going to be right in here at about 381.50 for a place that you definitely want to see hold. As we move over to the Qs, you can see we were right up against it on this falling wedge. We got over the 20, which is positive, but we got stopped at this high volume over price bar. So now I really think the objective is 290 to take that out and to hold 285. I think that's your trading range. And if 290 can be taken out, I think we would see a move up near the 50, which comes in at 299.70. We do have some technical resistance here at 298. So I think you could see a $5 to $8 move on a breakout of this falling wedge. And bigger picture, it would open up the door for higher prices. And then what we can do is have this high volume over price bar, extend out as a support level. But that would be significant if we could take out 290. And we see here we reached up on the last couple of candles and got turned back. We've got a high volume over price bar here on the 1 hour chart that should provide some support right in this 287.50 area. Worst case scenario, come back to 285 and then bounce and go higher. What I would be looking for on the indicators is you don't want momentum to roll over. You don't want RSI to roll over and lose 50. That would mean this little upcycle would likely be coming to an end. So keep an eye on your indicators. You just, if you're bullishly positioned, you want to see the corresponding indicators, pointed higher, and you don't want to see those roll over. IWM, really no participation yesterday, down 0.75%. You can see right here, price came up to tag the 20 and was rejected. We took a look down below to this 170 level where it found support. So that kind of revalidates that number as well. I think to get this thing going, you got to take out the 20 and move above this 174.50. And if price were to break 170, then chances are can roll down to 168, something like that for starters. You can see here we've got a very well-defined downtrend line on the 60-minute chart, and that downtrend line has been validated multiple times now. Remember, when we first drew it, we had a starting point up here, and then we just had one touch right here. That's not a very, when you've only got two touches, that's not a great trend line. But what has happened since then is we had a reach up touch here, rejection, we came back, and we had another reach up touch yesterday that was rejected. So what that's done is further validate that trend line. So breaking above it will make it all the more important. So if IWM can push up here in the 173s, and certainly if it takes out 174, then I think the path would be open to 176.50 and then 178. Meta, pretty nice day yesterday. If you're a guy that's sitting there watching ticks all day like I am and many others, you probably noticed a definite hesitation in front of the FOMC where nothing really happened for quite a while. And then finally, there was a push up to 170. We took a look above, which ultimately failed like in the last half hour. I'm sure you noticed that was not a great close yesterday. But we did move up to this 170 level where we had resistance, 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 and now resistance yesterday. So what you want to see is price take out 170 and move up into this gap, and then the bull continuation will continue to proceed. But right now 170 has to hold the benefit of the doubt. Resistance is resistance until it's broken. So if you're not in it, that's fine. You just set your alarm at 170 and then see how it goes today. Get a price break above, you take it long, and then see what happens at 172.71 at the bottom of the gap. Hopefully make that gap entry. Apple did have something that I regard as fairly significant. We had this large volume over price bar here. We had resistance at 142.50. In the morning session, things started out well, made a push above, and then we recaptured that 142.50. And even in that final half hour where they brought it back, 142.50 held. So from a technical standpoint, the door is open for a move to 145, and you'll notice support back here in the chart. That makes this resistance for price today. So as long as 142 holds, I think the bulls are definitely in control of this. And what they've got to do is continue to push it higher, come up here, take out 145, and that would open the door to 147. If you get a rollover at 142.50, then that would open a door for a back test of this downtrend line and possibly to revisit 140. Tesla, no progress. The one good thing that happened is we took a dip and came right back up to 700, and so large volume over price bar here. Bulls got to push it above 700 to open the door to 720 and then 735. I would not want to see it break this low here at 685. Then the door would be open to come back to this old gap level around 673. So yeah, 700 your clear pivot on Tesla. Here on Microsoft, we made it a nice day, up 1.28%. You can see, as I've drawn it here, the prior high at 268 proved to be resistance yesterday. We came up, we broke above this 266.50 zone. We reached up into 268 where the prior high was, and it got rejected there. So really for the bulls to keep this going, they got to take out 268, and that would open up 270. And you can see up here at 270, we've got a large volume over price bar, and we had a lot of price congestion between 270 and 274. So all of this is going to become resistance right here at 270. And so that would be a location where if you had been riding this higher and you make it to 270, that would certainly be an important juncture in my mind of where, number one, you could get a hard rejection, just come up here, tag it, and then fall away quickly, or come up here and tag it and consolidate for a while. I think the least probable outcome at 270 is that we just blast right on through it like it wasn't there. So just because of all this resistance, I think something either of a hesitation or a flat out rejection will happen on the first touch. So the point in saying all that is, if you've been lucky enough or good enough to have been in this and you are in the money on your options, I think that would be a place to take it off, go to the bank, rest easy in front of the jobs report, and then wait for a break above 270 as your trigger, because once 270 is taken out, what do we always say? You leave a trading range, you come back to the trading range and go back inside it, your target will be 274. So I think that's going to be an important juncture, and I wouldn't want you to sit there, for an inordinate amount of time while it either consolidates or, even worse, a real hard rejection there. So if you get a touch of 270, I would make sure you go to the bank and then re-alarm 270 for a fresh long entry if you're interested in Microsoft. Moving on to Amazon. We started the day yesterday, 113.50. You did get a chance. If you were interested in Amazon, we said if there was a pullback to 112.50, you could be a buyer there, and that turned out to be actually a good play because you got to move up to 115. So you were 250 to the good on that trade. Now this morning, 115 is the clear pivot. I think with a break above, see 117, and I think that's going to be a really important level. Why? Because was the prior high here, and there's not a lot of trading resistance between 117 and nearly up to 120. You've got the 50 DMA coming in around that same level. So that would be a place to be very, very careful, because usually after you've been on the wrong side of the 50 for quite a while, usually that first touch becomes a problem. So if you catch a runner and we go up, take out 117 and make a run to the 50, that would be another place where I'd say, what, make price prove it. Make sure I go to the bank. If price is strong enough to jump above the 50 in this 120 level, then take it long, because then you got a potential run up to 125. Google has remained good. We had a little consolidation under 2280. We broke out, but even on the pullback, you can see that once resistance was taken out, it became support at 2280. So I think you can be long against 2280, looking for 2330 and potentially 2370 on the upside. On the downside, if you come back, notice the high volume over price bar here. If you came back into 2245, 2240, I think that would be a place where you could try a long with a stop just below and see if it bounces up from there. No participation yesterday with Netflix. We had our downtrend line, touches here, touches here. We had a touch the other day here. We pulled back, re-ramped, and ran into the downtrend line again. So I think your pivot remains at 186 for a re-entry back into the old gap with targets at 190 and 193. I would not want to see price lose 182 on the downside. You can see that the PPO is beginning to flatten here. RSI is beginning to flatten there. And so if this gets rejected, if we come back here and it gets rejected, that'll show you that it's losing power. And if you were to come back and lose 182, I think you're probably going to come back to 178. And you don't want to be on the long side if that were to happen. Semiconductors. You'll recall that we were short when we came down here. We covered, stayed short. Price told us that was probably wrong, and it has continued to advance. We've come right up here to the gap from the other day. This was from the Micron earnings announcement gap where there was a lot of weakness in semis. So we're back to the gap that's about $3 wide. So if you're a sharpshooter and you see that a bullish day is emerging, you can get long at the entry to the gap at 200 and see if you don't get a gap fill, or at least up to 202.50. 203 would be the full gap fill. But you can see you got a high volume over price bar here. These lows were a little bit higher, but that's still going to pose some resistance. And so really to get this thing going is a breakout above the downtrend line. And if that were to occur, in hindsight, what would you call this here? You'd call it a bear trap, right? Anybody that thought price was going to be continuing lower, once you reclaim that 203 resistance level, then you look back and say, yeah, that was a bear trap. A fake break below, quickly recovered, would be your trap. Now, luckily for us, we kind of saw the trap coming, so we wriggled out of it before there was a lot of damage. Let's look at the other scenario. What do we often say is typical price action? You got the initial breakdown. You come back and fill this gap, right? Technical check mark, and then roll over. And then what you'd say is breakdown, back test, fail. So we've got to be on the lookout for both. Hard to say which way it's going to go. If semis come up here to 203 and then there's a hard rejection down, I don't think that would bode really well for our longs in tech land. I think semis remain a risk-on, risk-off asset class. So if this does indeed turn out to be a breakdown backtest fail, then you'd probably see, your Apples and your Microsofts and those names start to roll over as well. So if you're somewhat bullish here, what you want to see is that 203 recaptured, then a breakout to fill this gap, and then recapture of 212.50. Another interesting thing yesterday was that the junk stocks did not participate. Even though mega cap tech was up, like 1%, the ARC complex was down. So I thought that was interesting. Here's ARC F, had an opening candle that was good and then just rolled over and settled in at 1650. That's your pivot point for today. To get this going again, you got to take out this prior high at let's call it 1690, and then move up here to 1750. Same thing in ARC-G. We're on the daily chart now. Ran into trouble at the daily downtrend line. I think what you've got to see here is a breakout above trend, and then take out this 3750, and then you'd have some real running room up to 4250. Flagship fund came up to this 4550, and you can see problem here, problem, resistance, resistance, resistance. So you've got a clear line in the sand. And what that means, whenever you see a long line of rejections, that makes that level even more important, because let's say we come off of this pivot point at 4350 and somehow, some way make it above 4550, then all of that resistance becomes support. So you can play this one of a couple ways. You could say to yourself, I don't have a lot of faith in this rally. I'm just going to leave it alone. I'm going to set an alarm at 45.50. I'm going to say, I'm going to wait till price can prove it. You get that alarm that goes off at 45.50, then take your long, because that will be a big level going forward if price can take that out. The other way to play, of course, is if you get a little weakness into the open today at 43.50 that holds. You make your buy down here, and you say, I think we're going to go up for another touch, at least of 45.50, and then with any luck, I'll already be long for the breakout. And then you could set your stop just below 43.50, and if it goes down, you're stopped out. ARC-W, same as ARC-F really, had a lookout above and then an immediate failure back to the pivot point at 52.50. To really get this going, you got to take out 54, and then you got to take out this high volume over price bar here at 56. So actually somebody mentioned in the trading room that junk didn't participate, and I said, no, it hasn't. That may be a good thing. I mean, as far as the market dynamics go, that it's not just, junk, bubble, Ponzi, fraud stocks are moving higher, but that more leadership has emerged in your Apples, your Microsofts, your Googles, your Metas. And so that may be a good thing, taking, the whole scope of the market. Because remember, the ARC names bottomed a long time ago. We're above the lows, whereas some of the other sectors have not bottomed yet. So that's an interesting thing in and of itself. Just going to look at a few of the names that we're in. We're long XBI. Made a push up towards 85 yesterday. Did not make it. Weakness. Now that is not a strong candle. We held the line, but you certainly wouldn't want to see a big red candle today. For one reason, we're long, so that would hurt. But number two is when you've got this type of a candle, a push higher, then close right where it opened. If you go look in your candlestick cheat sheets, you'll see that's a gravestone doji candle type. And, if you're trading, anything with a gravestone is not good. So we're going to have to watch that one close. And if you're in it and you're watching ticks all day long and you see this thing start falling apart, I would just get out of it just because of this gravestone doji. We may come all the way back to 77.5 for a back touch, which would still keep the chart bullish, but you don't want to sit through a $3 pullback. Even if it in the long term will be bullish, you'd want to get out quickly and then re-engage 250 lower and see how it goes. IBB broke out of this daily downtrend range just like XBI, which is bullish, but a very weak candle yesterday. Use your best judgment. I think as long as we hold 120, we're fine, but you certainly don't want to see price lose 120. I would definitely be out of that position if we broke below 120. We went long XLV yesterday. Why? We recaptured all of the moving averages, including the 200, and moved above technical resistance at 129.50. The sector continues to do well, and even after a little pullback in here, came right back up. Now, if it can hold, 129, 150, 129, 129.50, and get above 130, I think your first target is 132.50, and then the top of the box at 134. Cigna had a little breakout yesterday that I thought was worth a shot. So I'm in July 275s. The close was not great. So I've got to stop down here around 269, 268.50. What I obviously want to see, and what you want to see if you're long, is to start moving away from this big consolidation range and solidify and consolidate that breakout, because it's basically $30 wide. If we can get a breakout here, we've got a measured move up to 300, and if that materializes, we'll be in really good shape. Also, another name that we flagged the other day, Humana, HUM, has broken out above its trading range, and has stayed above it for the last couple of days. So I'm hoping that translates over to strength in Cigna. So let's wrap it up there. If you're new to the channel, thank you so much for spending some time with me. If you appreciate technical trading and you appreciate getting a morning game plan each and every day with the pivots and targets and hopefully some helpful commentary, please hit the subscribe button and the alarm bell. Jump over in the show notes. You'll find a link to the blog site where you can drop in your name and register. That way, morning, noon, or night, whenever I see something, a trade setup, a chart, an observation, I'll send it your way. You'll get it right in your email box, and you won't have to hunt for it. And also, that invitation to our trading room will be sent to you. We'd love to have you join us. A lot of good guys and gals in there, working hard and often bringing compelling setups to my attention that I never would have seen on my own. So there's a lot of collaborative efforts there. So I hope you have a good day of trading. Let's see if we can get some positive follow through today ahead of the jobs report tomorrow. And I will talk to you next time. This has been Chris Buss with Traders Profit Compass.